Good morning, good morning. Welcome back, everyone. We are looking at Bitcoin on a daily time frame. Excuse me. As you guys saw yesterday, we were trying to get into a higher close, but we did not break above our previous high, which is around 21.8. As of right now, until we have hourly open and close above 21.7, I'm not even looking for a test into the 21 on a daily time frame, which is around 22,400. I want to say by the time we get to that level, it'll be there. The fact that we're closing so many candles here and going sideways, EMAs are coming down. So just be warned. There's other economic events on the calendar, such as the Jackson Hole meeting, which they will be talking interest rates. And whenever Yellen or Powell open their mouth, markets go like crazy volatile. So if you're not in a trade, today would be a great day not to do anything. If you were short and you are here, you should be taking some profit. Hopefully we can go down and get more money for you by testing out the other liquidity. Month ends in 7 days, everyone. And these levels right here, I'm going to point them out, are very, very important. 18,800 and 19,900. That's what we're playing defense, and ignoring those, we are literally bouncing off of our support. So you don't get too many opportunities to bounce here. This was the one option I had. If you go back, this was the one area we were looking for accumulation on, and we got it. Okay. Now, if we test back into this area, I have a little less faith of upside, and our ladder of our short, for all the people who took that short, I'm removing that ladder. Mission is accomplished. There's no reason to play this short more. You should take your profit a little bit and wait to see if this area breaks down. When I say take your profit, I mean take some profit, but let the rest run to see if you get to the lower levels. Once you lose 20,800, it's going to be some big issues for bulls to try to keep this up. So yeah, and this was the other real short that we had. So I can remove all this stuff. I'm gonna leave this channel here. There's a reason I kept this. I'll explain that later. Alright, so this hammer not needed. Everyone saw that. I'm looking for my area here for a buy. I've been playing with these now. Few cool little pictures and colors. Alright. So I like this area for a buy because it is also going to test the low of the original bottom, and it's going to test every single long. Already a month plus, people already got their behinds handed to them to chase this little bit of rally. And when I drew this these two lines here, once we lost this 24,500, like we knew the short was legit and you could have a stop loss above it. Okay, now what I was saying is from this block, the target was 21,550, 21,560, whatever. We hit that, we hit the golden pocket. We're basically combining in between. This is the 1.168 extension. If I do the 2.618 extension, it's going to be over here. I don't know exactly where it is, but that would be the next move after this one is a failing. So I'm not even going to do that right now. The point of the matter is I already drew this fib over here for this other order block. That's right. It doesn't matter. Yeah, we can leave that here. I can even remove this one now. I will remove this. This area, see this fib right here, this 21,560 is right here. I already have it encompassed on the tracement over here. So you don't need to worry about this anymore. I was just showing that this is what I was measuring know if we went to the upside to the downside where I want to take my next level of action. And I knew that I was going to stop trying to take a trade right after here, and I waited all the way till the fib. That's why I don't like to trade this gap. Like, it doesn't matter to me. I won't trade this gap over here. It doesn't matter to me. I need to wait for another extension to hit, because the way I play my retracements, there's like a bounce that happens with it that I watch. I don't know how to explain it. You guys will watch my live trading and you'll understand. There's a way I do my madness. I'm leaving this green channel here because the long was right off of here. We're already rolling over on this. We can't even get back into our previous breakdown. This was another. So coming back into this green channel in this area, I would have to start losing my bearish bias after 21,700. Okay, hourly open and close above 21,700. I'll be like, okay, we might be tapping the 21, which is going to be around 22,600 for the next rejection. So just keep these levels in mind. Between 22.6 and 22.9 is where I'm expecting the next reaction for a downside. If we can hold 21,000 here. If we lose 20,800 on an hourly open and close, you're going to see us come to my special area. So yeah, and I have targets even lower than that. This is just one fib. We have real targets much lower than that. I'm just gonna quickly show it to you, because from this block, and this is actually little too gracious, I'm gonna tighten this down. Do it right now. So you see this golden pocket? We're about to move it. Now I want to defend nothing. Now I want to defend this area right here. This is the next area I want defense on at 19,600. If we can't hold 19,600 on this poke back down after losing 20,800, then we got some issues, because this is the real support of this little block over here. Okay? Once we lose this, it's going to be people trying to short and use this as resistance to the upside. So yeah, that is the daily on Bitcoin. Let's go to a 4-hour. Move all of this stuff. I want to check volume, check that. Cool. We're nowhere near the 21 on the daily. Now we're looking at the 4-hour. Volume is slowly coming down. I can see that. Price action has come to the plateau, and I was going flat and finding lots of wick rejections off the 21 EMA into 21,271. Losing this level right here, you will see downside. Just telling you that right now. Yeah. Once you lose this 21,700, you're probably going to go test lower, like around 20,500, 20,400. If you can't get this bounce off of these areas, I mean, you got the larger golden pocket, and then you have this 18,600 is the one-to-one extension of this block. And that's also the previous month low. And we have about 7 days left in the end of the month to test this low and close above it. If we close under it, it is going to be a red candle, and obviously closing even under this level here, 19,900, it'll be a red candle. This doesn't look good for long term. Let's just say that much. All right. If I'm giving you a lot of bearish stances. Now let me give you some upside. Claiming above the 21 over here will give us an opportunity to get even higher. This is 21,400, but really we need to break above 21.5, because that's where the weekly opened. So this weekly candle is red also until we get a close on Sunday above 21,500. So just keep that level in mind. You should expect a lot of resistance there. You should expect some support over here for sure. and over here. You know, this monthly level is a really important level. So you should be paying attention to that. If we can't break out of this channel here, like all the people who are long, if we can't get out over here to, you know, for you to like break out and take your profits, you definitely need to start understanding like, hey, it's time to consider I'm wrong on my long, and maybe I should just take a stop loss and wait for the lower levels for taking it. Or if you want to be stubborn like me and I'm long and I'm like looking for downside, I'll just open a short right here with my stop loss under here. I mean, sorry, if I'm opening a short here, my stop loss will be above 21.6, and then I'll let my short make me the money and close my long in a little bit of loss, like under the golden pocket. After this wick, why are you holding long? If anyone can explain that to me, that'd be great. I don't understand how, like, where is the TA in it? I don't get it. I don't understand the logic. I can't even use this wick. I want to use that wick. I can't use that wick, but I'll just show you this. I'm gonna have to redo this in a second. Yeah, let me just do it this other way. Hold on. Get this out of there. We're gonna do it this way, because that wick is when I get price action like that, I gotta encompass it. I don't know. I'm OCD. Like, if you guys didn't know me, I'm like, I get hyper really quickly, really easily, and then yeah, I just want to make sure that if there's anything I can plan for, I can plan it. I would be looking at it like this. I would not look at it as a channel. I'd be looking at it as this wedge, and I'm gonna wait until the wedge does something. For me to take a trade, I'll trade short off the top of the wedge, long off the bottom of the wedge, and then stop losses along the edges. That is what I suggest for this 4-hour chart. And then you have your fib as your guidance, and then you know you're in your channel. I can't make it. This consolidation right now is almost looks like, to me, bottoming structure. The wicks to the downside is showing accumulation. The wicks over here is showing you the selling pressure. We're tightening on top of the golden pocket. I mean, if this wants to poke up and then reject down, it makes sense. Like, you can poke up to the 55 EMA, which is around 22,100, and then roll back over, because we tried to make it into the channel and reject it off of it. So this is ideally a great area to take some shorts. If you're taking longs, you want to take your profits here, because this is where you can roll back down. So, all right. That is enough on Bitcoin. I'm gonna actually quickly take a quick picture of this, because I see other things that are possibilities, and that's the beautiful part about TA. There's multiple ways to look at it. So, okay, that's being done. Oh, I can't share it yet. That will pop. Okay, so there's that chart. Now let's go look at Ethereum really quick on a daily, and I'm gonna just show you guys what I like to show you guys every day. We're gonna play the guessing game as to who is the weaker asset. Is it Bitcoin or is it Ethereum? And then I would love it if you wrote it in the section below, in the comment section below. Who is the weaker asset, Bitcoin or Ethereum? Here's Bitcoin. Okay, just press down. Bitcoin, here's Ethereum. Here's Bitcoin. Here's Ethereum. Now, why do I use my lines, my squiggly lines? Am I going to be able to know that by just looking at the... Yeah, you probably would. You can see it in the price action, but look at Ethereum making sort of like an inverse head and shoulder, and now it's trying to make a head and shoulder kind of distribution, like top kind of situation. And look at Bitcoin the EMA is rejecting off 21 is rejecting off 55, showing you bearishness. Price action underneath, you can't even test into it. This is just looking weakness. The EMAs are pushing away from the 200. Like all of them are like looking like they're sick and they want to run away from it. Ethereum, at least we are testing back into the 200. 21 EMA is above the 55 EMA and 200 EMA, trying to hold the 200 as support. If price action can freaking just get back up above the 21 EMA right now, like $100 pump on ETH will kick some shorts out and also allow you to start making this head and shoulder, whatever you want to call it, formation into a fake out and just pump right past up. All of this, all of these people, everyone here, all this, like all the way up to here. Like there's no reason why they can't come all the way over to this level. It is a possibility. So someone with a lot of money has to do it. Maybe it's a news article, whatever. But if the bearishness does come in today and we want to like actually show, hey, we are not bullish and this is a distribution and we are going to make the measured move like a BART, you know, like BART style, like everyone says BART, like back down over here, like to 1300 or whatever, then today we would like to make a bearish engulfing candle, close it bearish, so completely encompass this previous candle. If the lower we go, the better, because that will force 21 EMA to lose this 200, and then you officially have a death cross, bear cross, whatever you guys want to call it. I just look at that as bearish when my 21 EMA is under the 200, and if it just came up and then under, that means this was a bull trap, in my opinion. So and my opinion is worthless because I'm a guy who talks on the internet, but that's how I've seen it, and that's how I worked PA back in the day. Like this right here, if this is doing this thing, if this is doing this triangle over here, then this is doing another triangle here. Okay, if the triangle's base broke and we're already under it, well, you know what I mean? We just testing the base that we just broke. What happened over here? We tested the base right here, and then it broke down. Are we about to repeat that here? I don't know, but at least I can visually see that something like that is a possibility, and we can say have a long and short. And then if the bottom does break, your long stop loss will kick in right at the bottom, and your short is going to be like cha-ching, 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 just printing you money. So it's okay if you get stopped out at a loss, as long as your hedge is like making money. So keep that in mind. And then nothing has to be high leverage. It could be low leverage, and you could add the leverage once your stop loss hits on one. You can add it to the other. Here's the 4-hour on Ethereum. So on the 4-hour, we just look like we're trying to claim the 21. Okay, if this can actually close hourlies above 7, should we say 17? 1675. If you have hourly open and closes above it, I can assume we can probably get to the 1768 level for the rejection, but just wait for those hourly open and closes. When that happens and you see weakness, it's a shorting opportunity. Each one of these areas, this is a shorting opportunity, shorting opportunity, shorting opportunity. Right now, if you want to ladder in a long, you can, but the real longs were yesterday. Okay, now if you're trying to take a long and we retest the low and break under it, you're just giving your money back, right? So it's like the real trade right now, since we're in the middle of the long and midline, and this is where you want to short, just be patient for this area to come. If this area doesn't come for you to short and we find rejection right here, start landing your shorts 1 to 5x all the way up to here. You know, as price comes up to here, you're not panicking because you know you wanted these short fills. And then your stop loss has to be above here, like right here, like 1775 is your stop loss for laddering a short under like over here at low leverage. Because if you're low leverage here, 3x, whatever, 2x, 5x, when you get to this level, I would be like double down. Have your stop loss above here now. Use the pink line. There's ways to go about it depending on how much you can stomach laddering. But as one of my other members experienced, when you're laddering your account, it will be scary because your position size is going to get large. So what he was doing was he assumed that if he had $1,000 account and he's using 5x leverage, everything's okay. And then he's using 10x leverage, everything's okay. I'm isolated. The issue was that his account with that money and then isolated, the leverage is applied to everything in that account. So he's assuming he's trading with $100 with 5x leverage, but he was really trading with $1,000 with 5x leverage. And then he doubled down. So now he's in the 10x leverage trade. I mean, all his money's in there. That was a learning lesson. He got out unscathed, but that was a learning lesson. Another gentleman yesterday was trading short on Solana with me yesterday, and he was not wearing his glasses, and he's trading on his cell phone. He levered up, and he assumed he was on 20x leverage, but it was 50x leverage. That is the kind of stuff that you guys want to start avoiding doing now, because if you're trading on these platforms with high leverage, sometimes things move fast. Your phone is going to lag. Your phone might lose signal. How are you taking sizable trades on a cell phone? It is extremely risky. Stop it. Stop it. Stop it. I only do cell phone TEA when I absolutely have to, when I'm on the move. My charts on my phone are actually almost linked to my Tradingview account, my computer, but it's actually a little bit different indicator. So I have my risk on check at all times. If you don't have the setup like that, I highly advise you to trade in front of your computer. You will probably be more successful because you can see more data on a bigger screen than as opposed to your little iPhone screen. You're trying to like, your thumb covers freaking 10% of the screen every time you're swiping left and right, man. So he got out with like 30% profit yesterday. So, I mean, that was also awesome. But my suggestion, when you go to Binance or Bybit, I suggest Bybit. That's why I always give you my affiliate link. You guys, they are also, we're saving money on their fees, like limit, okay? Limit trade. Even if you're not using my account, on every exchange when you're trading, even limit trades now charge you a fee. I think it's 0.1 on Bybit and all them, and it's like 0.25 or 0.5 for a market trade. So now the exchanges are not giving you the free trade even if you limit. So if you're using a limit trade and you're just trading for a couple bucks on high leverage, you're going to chop yourself up in fees. If you're trading and you're not even using limit in your marketing orders, you're chopping yourself up in fees, because if you don't make above a certain amount of percentage to cover those fees and you're buying and selling, there's 2 fees, right? You have to calculate all of that in your trade. And some of these platforms have those calculators in there for you, so you can click on it and like estimate exactly what your risk would be if it goes to one point or the other. And the stop loss feature on Binance, on Bybit, also gives you that ability to click a stop loss, and then it'll tell you this is your projected P&L, if you take the stop loss. So use that information to your advantage. It's very, very important. The point I was trying to make about those platforms, they have a spot side and a derivative side. When you're trading in perpetual contracts, the money that is in your derivative account all will get used, whether you use isolated leverage or cross leverage. So I highly suggest, an example was, I told him take your $1,000, put it all into your spot account. Move $100 into your derivative account. Now you are trading using leverage. You can even go 100x with that $100, and you're only losing that $100. I don't suggest you doing that, but I'm saying if it came to the point that you're laddering in a bad trade, you have no idea what's going on, you didn't cut your losses, your 100x leverage, and you're close to your liquidation, you have that $900 on the other side for me to manage your trade with. If you're in a losing position on that trade with the 100x leverage and it's isolated, I will immediately tell you, hey, we can hedge. You take another $100, move it to the your trade side, your spot account. Sorry, move $100 from your spot account, move it to your derivative account. Your 100x trade, it should be on isolated. So this $100 that you just transferred doesn't mingle with that margin from that trade that's in the water. You can open 100x a hedge of the other side and then go cross leverage, and you'll immediately not get liquidated. You'll have both sides running, but you're basically limiting your loss or your gain from when you opened your original bad trade to where you opened your hedge trade. The middle is called a straddle, and this is called an option term. So it could go up as much as it wants, it could go down as much as it wants. You won't be able to get liquidated because you have both sides of the trade. Now, the negative part about this, also one of the members asked me about, hey, I'm in a trade, I get chopped up over time. It's called a funding rate. If you're trading perpetual contracts, there is a funding rate that you will pay every 8 hours, every 12 hours, depending on what exchange you're using. And they will have that predicted rate calculated for you. So if it's positive, that means that the shorts that are on the books will get paid the dividend or the funding rate from the people on the opposite side of the trade. And then if it is negative, it goes to the longs and the shorts will pay the funding rate. And that happens every 8 hours. Now, how to avoid getting eaten up by funding rates is to go to your trading platform, and in wherever you're doing your perpetual contracts, they will have a contract called inverse contracts or quarterly contracts. And if you use those contracts, you will pay no funding fee ever. The negative aspect of those contracts are that they're quarterly, so they last 3-4 months or 1 month, depending on what term you want. They have like the options. Some do like weeklies. So if you want to trade those, you can trade those. You have no fee. But the issue with those will be that once the contract expires, even if you're like 50,000% in profit, they will close your trade. Okay, you'll get your profit, but they will close those trades when the contract expires, and you have to reopen a trade. So your entry, your bragging rights of your P&L, all of that stuff will go away. So that's why perps is better sometimes. But if any of you follow some of these YouTubers like Crypto, Moon, and like everyone else who's got these like longs and they just hold them forever, if you look at their trade, you'll see their funding rate is like 50,000, 100,000. Like, it doesn't matter, but they're paying that much money in funding rates is psychotic to me. So yes, vanity is one thing, but at the end of the day, they're still paying those fees, and then some of them got those trades closed out at losses, and they pay the fees. So that's a life lesson to learn. So that is what I wanted to say. Last thoughts on Ethereum. We're looking like we want to poke into this area, but it's all resistance ahead. Okay, we are gonna probably tap into here and then roll around. We might get into these little bit areas as soon as markets open, and then after like right now it's 7:30 my time, so in about 2 hours it'll be 9. You might see hourly up, and then the roll around after noon. So 12 o'clock. Just be ready for this. Maybe an hourly into the open, you'll see the weakness come in because there's no excitement in the market. There's no catalyst for upside. On the 4-hour time scale, look at your volume depreciate, how quickly it's dropping volume while you're going to the top. So this is a bearish divergence in volume, in my opinion. So this 4-hour close in 30 minutes is not looking like it's going to close above this candle. Let's see how the next candle opens. If the next candle wants to continue above 1650, that's great. But if we find weakness, it's going to roll down. And yeah, as soon as you lose this level here at 1612, you will see the real downside come through like harder. So just be prepared for that. Aside from that, guys, thank you so much for stopping by. If you have any questions or concerns, please feel free to reach out. If there are other assets you want to cover, just leave it in the comment section below. In the description of the video, you're going to find the information on the Discord group, which membership will be open until the end of the month. And then I will be making all of that disappear and only the members will be seeing it. Perks of membership is constant access to me, as well as the 200 slots of the market feature of copy trading for the platform on Bybit. Aside from that, guys, please don't forget to like, subscribe, press the bell button for notifications, and please do, like, if you can, share with family and friends. The more the merrier. I will talk to you guys soon, and stay safe in the trades. I'll be sharing my scalps with the people in the Discord group throughout the day. And if you're trading a coin, let me know and I'll chart it out for you so you can at least see what my squiggly line TA says. Thank you so much, guys. Be safe. All right.